Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Always glad to be invited on, Jim. Thanks for having me as a guest.
Rick, have things become so complicated that we really can't fix them or get them to go? It seems you have to call in an IT guy to change a light bulb these days.
Well, funny you should mention that. I had a 5-hour tech support call yesterday, when I plugged in a new phone. I use Vonage, so it hooks into my household network, and just plugging in a new phone, you get frontline support, and they don't even know that you can't port your contacts, your address book from one phone to another. I needed to get advanced tech support for that. But at the end of the 5 hours, when I thought things were fixed, and the support guy said, well, we'll see you, the phone started ringing every 20 seconds. And the caller was identified as a 4-digit number, meaning it wasn't an actual caller. It was just some fluke with the server. So there I was at 5 hours into escalated support just to plug in a phone, and still couldn't get it to work. So yes, things have gotten a little too complicated.
And you have the premise that self-driving cars are a fraud, at least at this point. Yeah,
they are. It's not going to happen. It may happen in 100 years, but the threshold has been sort of moved in really close, and the reason for that is that it's supposed to stimulate the proletarian appetite for stocks like Uber stock and even GM stock. But the reason I say driverless cars may never work is that they're going to use artificial intelligence, which I assume comes from the same imbeciles that have given us word to text translators. When I dictate messages into my texter in my Samsung, my Android phone, it will take a name like yours. I'll say Jim Goddard, and it will capitalize the J in Jim, but it will lowercase the B in Goddard and the G in Goddard. And if they can't even get that straight, how the heck are we going to be driven around by the same algorithms and that in the past have made some silly errors where people did get killed? And I will concede that driverless cars will work fine when all of the vehicles out there are driverless. But of course, it's a chicken or the egg thing, and I don't know how to get there. But so we've got, and also these AI programmers. There's a lot of artificial intelligence hubris, but I think that the state of the art in voice to text really says it all. And I just think the whole generation, I hate to say the word millennials, but they're the ones who are writing the software. They're the ones who have made that big office tower in San Francisco lean slightly, and they're the same engineers who built the additional cantilever span for the Bay Bridge that, of course, has corroding bolts that are embedded under 20 feet of concrete. So even engineering ain't what it used to be. And so you wonder, why do we keep getting this artificial, this driverless car thing coming out the wazoo? And the reason is it's just another stock scam. It's if companies sort of hook their stream of revenues to some golden pie in the sky, I guess that's a bad metaphor, but if they hook it to some end of the rainbow, that it's essentially an unlimited vista of opportunity. So when Uber talks about their big investment in driverless cars, it's only to distract us from their core business, which is ride sharing, which may never show a profit. So that's why we're talking. You know, we hear that GM has got $20 billion thrown at driverless cars, and of course they're no closer to a driverless car than the cancer industry is to a cure for cancer. So there you go, Jim.
Well, and do you know anybody right now who says, I can't wait for the driverless car. I'm willing to throw my body on the line to let this thing drive me around?
I can't imagine it. And yeah, I mean, I've been too lacking in imagination in sometimes to see the future that's actually happened. But as far as getting in my car and having to take me to the beach or something, I'm just not, I don't need it really. You know, for all that has to happen to make that happen, I'll be happy to get behind a steering wheel and do it myself.
Well, I mean, right now, the driverless vehicles, we've had a driverless rapid transit system in Vancouver since 1986, but that's on a elevated guideway or in tunnels, so it doesn't have to worry about people running red lights or pedestrians stepping in the way. And also with AI, one of the problems they have found is the so-called smart car can't tell, is that just a pedestrian or is that a policeman signaling me to stop or to turn left when the signal up there on the light stand is telling me to go left.
Yeah, and you know, when you're just driving around, sometimes you may think, well, geez, could a video camera have handled what I just handled instinctually and reflexively? It's obviously, it's very complicated to get a car to drive around and be cognizant of all the things that we see as humans. So I don't know. I mean, it works. The driverless car works not as driverless cars, but as driverless trucks. And I think that's where the economic push is coming from. All the trucking companies, they see the highways just with a long string of trucks like elephants, trunk to tail, and that would work just fine. They're all just sort of moving together and that'll work. But the question is, how do you get from there here to there? And in my case, you know, I've got a Lexus that's half as old as I am, and we really have to turn over the entire fleet of cars right now to have them become driverless. So just the horizon of capital of depreciation that's got to take the current inventory of cars off the road, that'll take even if the technology improves to the point where we trust these cars, it's still going to take 25 years to get to replace all the current cars with driverless.
And of course, telecommuting, so many jobs, you know, can be done at home. Why do you have to go to a central office to do it? After children reach a certain age, why do I have to send them to some drafty old building that leaks or cracks or is at risk of falling down in an earthquake, when they can learn perfectly well from computers? Don't forget, they're staring at computer screens the moment after birth. They're kind of used to learning that way.
Yeah, and I think just as, I'm not going to say office buildings are dead. WeWork kind of reimagined that, and the cities are being reshaped right now in a way that accommodates workforces that can kind of be anywhere. And it's benefiting cities initially that have really good housing stock. Pittsburgh is a good example. They have many neighborhoods where you can buy these beautiful old Victorian homes for like nothing, $400,000 for mansions. And so Pittsburgh's a relative bargain, and it's no coincidence that you have a major outpost for robotics there. Mainly Google having stolen all of the robotics people from Carnegie Mellon, which used to be the best, had the best robotics department of any university. So we're bringing back a lot of the cities, and it's just interesting how all the patterns, these huge demographic patterns, are constantly shifting faster than anyone can predict.
Also, if they want robot cars out there to replace the automotive market of today, Millennials do not have the same obsession with new vehicles and sporty cars that you and I did when we were young.
Well, I think that we talk about, they don't have an obsession for this or that. I think it's really a question of affordability. And that if cars were more easily affordable, especially in the places where some of the best jobs are, that millennials they'd be driving a lot more. But you eliminate the expense of a car, and I guess you can rationalize that partly by saying, well, Uber and Lyft are great. They'll take me wherever I want to go. But you and I know, having been gotten used to having a car in a garage and being able to go anywhere we want, anytime, it's superior to Uber and Lyft.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Rick Ackerman. Rick, you have a new way, perhaps, of investing. It's totally simple. You don't need the computers or bots to do it for you. You've noticed a pattern in the markets over the last few recent years. And what is it?
Oh, I didn't even know we would talk about that, but I've been I've taught a course that uses my own hidden pivot method to analyze and trade stocks, and let's just say over the years this system has become more and more refined, and a particularly useful refinement that we're using now just uses a simple ABCD pattern to identify some good trading opportunities, but it certainly gets the trend right. Obviously, if you have a target, a price target, you need to get the trend right to begin with. But it's I guess not quite as simple as ABCD. There's some idiosyncratic rules, but it works pretty well.
So you notice that the market, even when it has deep dips, it's never down more than 3 days, or sometimes it never really reaches a total of 3 days.
Yeah, I put that out there the other day. I was just sort of doting on the fact that you go back forever and try to remember a time when the market was down for 3 consecutive days, and I don't remember it ever happening. I guess it did, but even in the '87 crash, the Dow on Friday, October 16th, fell. I think it was 108 points. I know because I was standing in the trading pits on a Pacific exchange at the time. All right, so the market got savaged on Monday, but by Tuesday, midday, it had turned around. So we had 2.5 days of selling. And even with this global panic attack over the coronavirus, what we got 1 day of selling on Sunday, or Sunday evening into the next day's opening, and then we had a sell-off on Monday. But here we are Tuesday, and the Dow is up 250 points, and that's about, you cannot beat this market down for 3 straight days. So it's been a very solid winner if you just go in and buy after the market's been down for 2 days. It would seem as though you can't lose.
We'll have more with Rick Ackerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is copper signaling a return to inflation?
Well, Jesse Felder put that out last week in his excellent newsletter. And there was a chart of copper. I have to admit it was compelling enough that I wanted to take a close look myself, because I've been a rabid deflationist now for 30 years, and I don't come easily to the case that we're somehow going to have inflation. I think whatever we have, the end game will be deflationary, simply because we're going to be crushed under the burden of debt, and that's the way I measure inflation and deflation. It's not in the ridiculous way of the monetarists who say, well, an inflation is an increase in the money supply, and deflation is a decrease. None of them even knows what money is anymore, and I don't say that to denigrate them. It's just that there's so many fungible forms of money, some of which are really pretty obscure, that we can't measure money anymore. So in order to recognize deflation, you simply have to look for its chief symptom, which is an increase in the real burden of debt. And I absolutely do not think we're going to get past that. We're not going to hyperinflate in the way that allows us to peel a few $100,000 bills off our wallet just to pay off our mortgage balances. So here's Jesse Felder with a chart that shows copper just kind of torqued and ready to strike, or coiled and ready to strike. And I think copper is a pretty good indicator. If copper's going higher, it certainly means that industrial activity is going to pick up with perhaps some corresponding inflation. So I'm looking at the chart and just his breakout point, I think, was $2.95 a pound for copper. I use a different technical method that puts my breakout point above $3.12 a pound. So I'm going to go really by the numbers there. It's too complicated to kind of imagine what could be causing inflation and this and that. I'll simply let the chart speak for itself. And so I'm not going to jump the gun. I really want to see copper on at least the weekly chart close above $3.12 a pound for 2 consecutive weeks. Or maybe even 2 consecutive months, and then I could see the price going up above $5 a pound, which certainly would be congruent with an outbreak of inflation. But I just don't see where it could come from.
2 investment conferences in Vancouver over the last couple of weeks have found people are much more enthusiastic about junior miners right now, and I think that's because gold has improved so much over the past year. What's your look on or take on that?
I have a love-hate relationship with gold. You know, the charts clearly say that gold is going higher. It's in a bull market, and I've got a target around, I think it's 720 for COMEX futures. But it's such an annoyance. I mean, every time gold rallies enough to get you excited, it turns around and goes the other way. So the bull market in gold, at least to the extent that it's unfolded so far, has been really frustrating. The corrections have been very, very difficult, very challenging and painful. But yes, it's in a bull market. And the same thing, someone asked me about platinum the other day, and I can't see the current weakness in platinum being other than a correction. It looks higher too.
Rick, how would you sum up what's happening right now? Confusing, threatening, risky?
We're in some amazing cross currents here. The market, you might say that, well, the virus threat has kind of it put a crimp in it for all of 2 days. But even so, we've got the wall of worry in the form of these impeachment hearings. But as you can see, at this point, there's no worry at all about impeachment. And I think Trump is on a roll. That's very bullish to the extent that perceptions wax that Trump is going to win in 2020. That will feed into the market. So I think we've got a sort of bullish loop going right now where all things are good. And you never know. I mean, bear markets begin in places where nobody really expected them, but it just feels like we're in a pretty bullish warp right now, and it's going to be really hard to slow it down.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. Again, thanks for inviting me.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.